Welcome back to the deep dive. Today, we're really digging into a very specific kind of high stakes investment idea. We're not just looking at the numbers for a bank, we're really trying to understand this focused, high beta bet on, well, the structural transformation of an entire economy, Argentina specifically.
That's exactly it. We're diving into Grupo Supervielle. The ticker is SUPV. It's an Argentine financial services firm. But the real goal here for you listening is to get why analysts see this particular company as maybe the purest way to bet on Argentina's huge economic overhaul succeeding, the whole shock therapy program.
Yeah, and the sources we've pulled together, it's a mix, right? Investment analyses, company reports, filings, macroeconomic news, they all sort of paint this picture of a country at a real turning point. And the banking sector is right in the middle of all that turbulence. So our job today is to boil this down, understand the big macro shift, figure out the high risk, high reward stuff, the catalysts, and what makes Supervielle different.
Absolutely. And before we even get into the bank's details, we have to establish the core assumption here. The whole investment idea rests on one thing. Argentina is fundamentally changing course. It's moving away from decades of, state control, financial repression, moving towards a market-based system driven by private credit. If that big pivot doesn't work out, well, the whole analysis kind of falls apart.
Okay, so let's trace that journey, because for a long time, Argentina has just been seen as, well, defined by instability. We need to start with where this claimed stability is coming from, these really radical reforms put in place since late 2023. So the new administration comes in and they immediately launch this shock therapy. It was aimed squarely at these deep-rooted problems, chronic deficits, hyperinflation. What were the main pillars of that program? How did they try to tackle those historical issues head on?
All right. It was designed as a two-pronged attack, really aggressive. Pillar one.
Yeah.
Massive fiscal austerity. They put in this non-negotiable zero deficit rule. That meant slashing spending, cutting subsidies for things like energy and transport, stopping huge money transfers to the provinces, just trying to balance the books hard.
And pillars here.
Strict monetary discipline. Crucially, this meant ordering the central bank, the BCRA, to stop financing the government's deficit. Period.
Which was the historical problem, right? The government spends too much, prints money, or issues debt the BCRA buys up, and boom, inflation spiral. So cutting that link, that sort of symbiotic, toxic relationship between spending and printing, that's the absolute must-do for stabilizing things.
Exactly. And look, the policy was painful, no doubt a shock. But the initial results, when you look at the source data, they're almost hard to believe how fast things changed. Let's just look at inflation. Monthly inflation hit this crazy peak, 25% back in December 2023.
25% in a month, just staggering.
Yeah, and by August 2025, the data suggests that figure has crashed down to roughly 2%.
That's a difference between your money basically evaporating every month versus something that looks like, normal emerging market conditions.
Mm-hmm.
That slowdown is the signal everyone's watching.
And you project that out annually, the change is incredible. Annual inflation was over 211% in 2023. Now, analysts are forecasting it'll drop below 30% in 2025. That rapid cooling off of inflation, that's what unlocks the whole credit system we need to talk about.
But like you said, it wasn't free. That kind of sharp budget cutting has immediate consequences. Demand just disappears, right? And that hits output.
It absolutely did. The sources reckon that fiscal crunch led directly to about a 1.7% contraction in real GDP in 2024. That's the tough medicine part. But, and this is the key, if the government can maintain credibility, that contraction kind of clears the decks for a big catch-up.
So what's the general view for 2025 then? The outlook?
The consensus forecast is for a strong rebound. Potentially, quite spectacular actually. Real GDP growth is projected to bounce back, somewhere in the range of 4.5% to maybe 5.5% in 2025. It's that classic pattern. Stabilization pain, then a growth spurt built on hopefully a more solid foundation.
And this fiscal turnaround, it has a direct, immediate impact on how the world sees Argentina, specifically its risk premium. Global investors care a lot about whether the government can pay its debts.
Well, absolutely. The success in hitting fiscal balance has already caused a significant, measurable drop in the country risk premium. When the market sees the government actually living within its means, that sort of existential fear of default starts to fade. Look at the debt figures. Gross federal government debt fell from this terrifying level, over 150% of GDP in 2023, down to about 73% of GDP by April 2025.
Okay, 73% is still high, globally speaking, but the direction is what matters, right? It signals a government actively trying to manage its debt, which removes a huge systemic risk that scared off international banks for years.
And that leads us right into Section 2. This is the real structural engine behind the Supervielle Thesis, the end of what's called financial repression and the huge opportunity that creates for banks.
Yeah, that term, financial repression, it can sound a bit academic. Can you break it down simply? What did the old system actually do, and what did it mean for a bank like Supervielle?
Sure. In the old system, financial repression was basically a closed loop set up to fund the government. The central bank, the BCRA, would print money to pay the government's bills. Of course, that flooded the system with cash, risking hyperinflation. So to soak up that extra liquidity to kind of sterilize it, keep it off the streets, the BCRA issued these high-yield short-term debt notes that used to be called LELIQs, now REPOs, and basically sold them directly to the commercial banks.
So the government kind of made the banks hold this high-interest BCRA debt. They were paying the banks a lot just to park cash that couldn't really be used in the economy. It sounds like banks were just acting as the government's very well-paid savings account.
That's a really good way to put it. Banks became these quasi-instruments of monetary policy, constantly just lending money straight back to the central bank. And from a bank's point of view, why wouldn't you? This BCRA debt was fantastic. High yield, short term, basically zero credit risk. Why bother lending to, risky businesses or consumers collapsing under hyperinflation when you could get 100% plus returns safely from the government?
And that created the massive crowding out effect everyone talks about.
Yeah.
Banks had every reason to just hoard capital in these BCRA notes and completely ignore their actual job of lending to the economy.
Exactly. And the result was catastrophic for credit. Private credit, so loans to businesses, mortgages, credit cards, it just collapsed. It hit this historic, frankly, absurd low of just 7% of GDP by the end of 2023. In stable developed countries, that number is usually like 50% to 100% of GDP, 7%. That's basically failed credit market.
Okay, so here is the big structural change. If the new government has this zero deficit rule, the BCRA doesn't need to print money anymore, so it stops issuing these high-yield notes. What happens to the billions and billions of pesos currently stuck on bank balance sheets?
That's the supply-side tsunami, as some analysts call it. The BCRA is actively unwinding these debts it owes to the banks. And crucially, they're not just canceling them, they're managing it by pushing banks from those old high-yield LELIQs into much lower-yielding, very short-term notes and reverse repos. The goal is to make holding central bank debt less and less attractive for banks.
Wait, you said forced earlier, and some critics might push back. Isn't there a huge risk that banks, scared of the volatile private sector, just take that cash and dump it into safer things, maybe dollar bonds issued by the government or big companies, instead of actually lending to businesses and people who just went through a recession?
That's a really critical point, and it's why the other side of the equation is so important. Yes, some money will definitely flow into safer dollar assets, but the sheer amount of liquidity being freed up, combined with the central bank actively making its own debt unattractive, it kind of compels banks to look for commercial returns somewhere else. Plus, with the stabilization we talked about in Section 1, those dollar assets aren't shooting up in value like they were. The easy trade is gone. Banks have to put capital to work to generate the kind of returns shareholders demand.
Okay, so this structural shift creates this massive supply-side push for lending. Banks just have to find a new, profitable home for all this cash.
Yes, that supply push is, I think, pretty much inevitable. But what makes analysts see this as a multi-year opportunity is the demand side waking up at the same time. That macroeconomic stabilization inflation dropping from 25% a month to 2% means borrowers are starting to come back, consumers, companies. They can actually calculate repayment costs with some confidence now. They start to believe the peso might hold its value, making taking out loans seem like a rational choice again, not financial suicide.
So you've got two forces lining up, banks needing to lend and borrowers finally feeling okay about borrowing. That structural need is really the core engine of this whole investment deep dive. All right, let's shift gears a bit to Section 3, making the environment less risky for outside money. For international investors, Argentina has been synonymous with the SUPV, those really tight capital controls. How fast is the government moving to take that apart?
They're doing it step by step, but the direction is clear. They've gotten rid of restrictions on individuals, like that infamous $200 a month limit to buy dollars. And they're working through the complex rules for paying for imports. The ultimate aim seems to be a normal, open foreign exchange market, maybe by late 2025 or early 2026.
But for the big institutional money, the kind that really moves share prices and valuations like price to book, the specific change that lets them get profits out of the country, that's the real game changer, isn't it? For years, profits were just stuck in pesos.
This is probably the single most important reform for global institutions. We're talking about allowing companies to send profits and dividends back home, specifically for earnings generated from fiscal year 2025 onwards. Analysts we read basically call this the investability factor.
And why is that distinction so important, profits earned after fiscal year 2025 versus before?
Because it changes Argentine stocks from just a pure gamble into something that could actually generate income for investors. Before this, owning an ADR like Supervielle was a trapped value situation. You bought it hoping one day the government would let you have the cash. Now for future profits, there's an official, clear path to access the FX market and send dividends home.
What about all those profits earned before 2025 that were trapped? Is that money just lost?
No, and the government seemed to realize they had to deal with that backlog to build trust. They created specific ways to settle those old obligations, mainly using special dollar-denominated bonds called BOPREALs. It shows they're not just thinking about the future, but also trying to clean up the past mess, giving investors a way to get that value out, even if it's through these structured bonds over several years.
So it moves the whole investment case from pure speculation towards actual strategy.
Absolutely. It takes away the biggest non-economic roadblock for global fund managers. Now they can actually think about allocating capital based on growth potential, instead of just constantly worrying about currency controls.
Okay, so besides the fundamental de-risking, there's this other potential catalyst, purely technical, that could trigger huge inflows almost overnight. The MSCI reclassification.
Right, this is where we get into the plumbing of the market. MSCI, the big index company, currently classifies Argentina as standalone. That's basically index exile. Major global funds just ignore Argentine stocks. The big potential move is for MSCI to reclassify Argentina back to emerging market status.
And the impact of going from standalone to emerging market is, like you said, purely technical, but the financial effect could be enormous.
Totally technical. Nothing to do with fundamentals, which is why it's interesting. All the passive funds and many active funds that track the big MSCI Emerging Market Index, they are required to buy Argentine stocks to match the index weighting if that happens. JP Morgan crunched the numbers and estimated a reclassification could force over $2.6 billion of capital to flow into Argentina.
Wow, $2.6 billion flooding into what's still a relatively small and not very liquid market. That would be huge.
It would have a massive impact on prices across the board, especially on valuations like price to book. It'd be this wave of buying where the buyers don't really care about the current price. They just have to buy to track the index. So this is a potentially massive external boost, totally separate from how well Supervielle itself performs, that could really drive a re-rating in the near term.
Okay, let's zoom in now on Supervielle itself. As you mentioned, the banking scene there is consolidating fast. We've seen big M&A deals creating much larger players.
That's right. The landscape is definitely concentrating. You had Grupo Financiero Galicia buying HSBC's operations in Argentina, and Banco Macro snapping up Itaú's business. These deals created this sort of dominant big two. Supervielle, compared to them, is smaller, more of a niche player. They know they can't compete just on sheer size. They have to be smarter, faster win, through agility and good execution.
And the analysis suggests Supervielle's management saw this change coming early. They didn't just wait around for laws to pass, they started moving fast.
Their timing seems to have been crucial. Management made a really aggressive strategic shift back in 2024, immediately starting to reshape the balance sheet. They were apparently one of the first banks to significantly move money out of those low-yielding BCRA notes and push hard into higher-margin lending to the private sector. That early move let them grab some of that initial surge in loan demand, maybe before the giant banks could fully react.
Let's get into the specifics then. What are the key things Supervielle is doing that make it different from the big two? First, there's this IDB Invest partnership. Analysts seem to think this is a really smart de-risking move.
Yeah, this looks like a major win for them, strategically. It helps them move beyond just relying on peso consumer loans. They signed a deal with IDB Invest, that's the private sector arm of the Inter-American Development Bank, for up to $250 million in long-term credit, denominated in U.S. dollars.
And why is getting long-term dollar funding such a big deal in Argentina?
Because it directly tackles that core risk we discussed, currency mismatch. They're taking this relatively scarce dollar funding and specifically lending it to export-focused small and medium businesses. Think agribusiness, energy, tech services, companies that naturally earn revenue in dollars.
Ah, so they're matching the liability, the dollar loan from IDB with assets that generate dollars the loans to exporters. It's like building a strategic firewall against peso problems.
Exactly. They're deliberately building a part of their loan book that's more resilient to local currency swings and those disinflation shocks hitting peso borrowers. It shows they're thinking ahead, not just chasing any loan they can find. They're strategically picking sectors that are less exposed to the local consumer slowdown where bad loans are already rising.
Okay, the second initiative is their tie-up with Mercado Libre. This sounds like a clever way to compete in the digital space without needing billions to build their own separate platform.
It seems very efficient. Mercado Libre is just dominant in Latin American e-commerce, and its payment arm, Mercado Pago, is huge. Supervielle didn't try to fight them head-on. Instead, they became the first bank to launch an official online store right on Mercado Libre's platform.
What does that actually let them do? What's the advantage?
It puts Supervielle right inside the shopping experience. They can offer exclusive deals, like interest-free installment plans, directly when someone's about to buy something. This becomes a super low-cost way to get new customers. They tap into Mercado Libre's massive user base, millions of people already vetted, and they get data and transactions without needing huge marketing budgets or tons of physical branches. They're kind of piggybacking on Mercado Libre's growth.
And third, they're not just relying on partners, they're also investing in their own tech with this super app. It suggests they're serious about keeping up with digital-only banks.
They definitely seem to be. The Super App, which apparently got some recognition as an outstanding project, is their all-in-one digital platform. It's meant to combine regular banking with investing points. They own an investment platform called IOL Invertidine Line, so they integrate that plus e-commerce links, and they're trying to stay ahead by using generative AI through WhatsApp for customer service, aiming for that high engagement and ease of use you need to compete now.
All right, let's get into the financials. But before we look at specific numbers, we have to talk about the accounting. Why are standard metrics, like a trailing price-to-earnings ratio, basically useless for Argentine banks right now?
Yeah, this is a really important kind of technical point. Because of the recent hyperinflation, the Argentine central bank makes banks use a specific international accounting rule, IFRS rule IAS 29 for hyperinflation accounting. What this rule does is it forces companies to restate all their Argentine peso numbers to reflect the currency's purchasing power at the end of the reporting period. Okay, so comparing a result from, say, the end of 2024 to the first quarter of 2025 gets really messy. Because the 2024 number has been artificially adjusted for inflation that happened after it was earned, it makes comparing raw numbers almost meaningless.
Exactly. Those restatements just make trailing TE ratios completely unreliable. So analysts have to lean heavily on financial ratios. Instead, things like return on average equity, ROAE, or net interest margin. These give you a clearer sense of the underlying business performance, stripping out some of that accounting noise.
Got it. So let's use those ratios. Looking back at their full year 2024 results, it seems like they really proved their early strategy shift worked.
Yeah, 2024 was definitely the turning point that showed management's early bet paid off. They reported net income of about 125 billion Argentine pesos and hit an ROAE of 15.7%. And the key number, I think, was that their total loan book grew 106% year over year in real terms. That's after adjusting for inflation. That huge real growth shows they really did shift the balance sheet and grab market share.
All right, but here's where it gets tricky, right? The latest results, Q2 2025, they seem almost contradictory. The headline ROAE number, 6.0%, looks really weak compared to that 15.7% in 2024. But if you dig deeper, the core business actually looks stronger than ever. What's causing that gap? This seems like the crucial aha moment in the analysis.
Yeah, that low 6.0% ROAE is incredibly misleading if you just look at the headline. It actually hides some exceptional strength underneath. Their core operations improved dramatically in Q2. They grew loans by a strong 14.0% just from the previous quarter. And their net interest margin, the spread they make on lending, actually expanded by 160 basis points sequentially, reaching 20.8%. So they're growing loans and making more profit on each loan.
So if the main lending business is growing fast and getting more profitable, what on earth dragged the reported profit down so much?
It was a deliberate choice by management, actually a prudent one. They massively increased the money set aside for potential bad loans, their loan loss provisions, or LLPs. They reported a huge 32% increase in LLPs just from Q1 to Q2. This wasn't because loans suddenly went bad. It was them proactively building up a buffer to cover losses they expect to see as the credit cycle returns to normal.
Ah, okay. So they're looking down the road and saying, hey, we just had this massive economic shock with this inflation. Some borrowers are going to struggle. Let's prepare for it now.
Precisely. They're anticipating what happens when inflation falls fast. For years, hyperinflation acted like this sort of hidden subsidy for people owing money in pesos. The real value of their debt just melted away. Disinflation yanks that subsidy away overnight. Borrowers suddenly face the true, real cost of their debt, and inevitably, some will default. That 32% jump in provisions is management basically signaling, we see this coming, and we're getting ready.
Which leads us directly into Section 6. The two biggest, most quantifiable risks facing Supervielle right now. The first one, asset quality normalization, is exactly what you were just talking about, tied to that disinflation shock.
This is the main challenge, the primary headwind. Taking away that implicit inflation subsidy makes it harder for people to repay loans. Borrowers who got used to inflation shrinking their debt burden are now dealing with a stable peso, and some, especially maybe lower-income consumers, are inevitably going to have trouble.
And we're already seeing this risk show up in the non-performing loan numbers, the NPLs.
Absolutely. The NPL ratio is climbing. It went from a very low, kind of artificially suppressed 1.3% at the end of 2024 up to 2.7% by the end of Q2 2025. That rate of increase confirms the credit cycle is normalizing, and quickly. Management's own guidance suggests they expect this ratio to level off somewhere between 3.0% and 3.5%.
So the immediate risk here is that the actual bad loans overshoot that 3.5% guidance. Maybe it goes to 4.5% or 5%, which would force them to set aside even more money, hitting profits hard.
That's the core execution risk right there. Although, it is worth pointing out, their current level of provisioning gives them some cushion. Their NPL coverage ratio, which measures how much they've already set aside compared to current bad loans, is at a pretty healthy 129.7%. So they have enough reserves for the NPLs they see today, but their future profitability really depends on whether that 3.0% to 3.5% forecast holds up.
Okay, risk number 2. This is the one that really defines Supervielle as the higher risk, higher reward play. Capital adequacy. For the listener, the capital ratio is basically the bank's safety buffer against unexpected losses.
Right. This is Superville's main structural weakness, and it's kind of the necessary trade-off for being nimble. Their Tier 1 capital ratio was 13.9% at the end of Q2 2025. Now, technically, that's above the minimum required by regulators, but it's noticeably low compared to their main competitors.
Let's put that 13.9% in context. How does it stack up against the other big Argentine banks?
The big two are sitting on much bigger capital cushions. Banco Macro's Tier 1 ratio is almost 30%, 29.9% to be exact, and Grupo Galicia is around 24.0%. That huge difference really highlights Superville's higher beta profile.
So what does having only a 13.9% ratio mean for Supervielle in practical terms compared to those peers?
It means they have the thinnest buffer if something unexpected goes wrong. If NPLs blow past that 3.5% guidance and hit, say, 5%, their capital takes a much bigger hit much faster than Macro's or Galicia's. And, importantly, it also limits their ability to fund their own aggressive growth plans. They want to grow loans rapidly, maybe 100% in real terms again, but every new loan you make requires you to allocate some regulatory capital against it. With a lower Tier 1 ratio, they just have less room to grow organically. It structurally constrains how quickly they can scale up to challenge the big two without maybe needing to raise more capital externally.
So they're running lean and mean, highly efficient in some ways, but definitely closer to the edge. It's a real high-wire act between chasing returns now and maintaining that safety buffer for later.
Okay, let's talk governance. Because in a market like this, so volatile with so much depending on execution, the alignment between the people running the company and the owners is really critical.
And what is it about Supervielle's setup that might actually reduce some of the risk we just outlined?
The key thing is the founding family's huge direct ownership stake. The current chairman and CEO, Julio Patricio Supervielle, he's a descendant of the bank's founder, and he personally owns about 25.7% of the company's stock. This isn't just some passive investment. That's a major, arguably controlling level of ownership.
Right, so having that much personal skin in the game, as they say, that acts as a significant comfort factor for outside investors. You know the person making the big calls has their own family fortune directly on the line with every major decision.
Exactly. It creates this incredibly strong incentive to manage risk carefully and really focus on long-term survival and value creation. That alignment is crucial, especially given the execution risk and that thin capital buffer we discussed. The CEO almost has to think long-term because a short-term blow-up would be personally devastating.
Okay, let's turn to valuation. We established that price to book, PB, is the most reliable yardstick here because of the inflation accounting issues. How does Supervielle trade right now compared to those newly enlarged market leaders?
Well, the market is definitely pricing the big two at a premium right now. That reflects their bigger scale, stronger capital. Galicia trades around 1.9 times price to book. Macro is about 1.8 times. Supervielle, on the other hand, trades at a clear discount to them. That's the market basically pricing in that higher execution risk and the thinner capital cushion we've been talking about.
But the core investment thesis here isn't just about buying something cheap today, right? It's about betting on a re-rating. The long-term play is that the valuation multiple itself will expand.
Precisely. The whole thesis banks on the idea that if these big structural reforms stick, if the currency stabilizes, the government maintains credibility, then that overall Argentina discount that weighs on all assets there will shrink. That discount is the penalty the market charges for all the historical instability. If it narrows, then the Supervielle's PB multiple should start to move closer to levels you see in more stable emerging markets in Latin America. And that offers potentially huge upside from where it is today.
And bringing back dividends regularly is kind of the final piece of that puzzle, the mechanism to complete the re-rating.
It's the necessary closing act, really. Formally setting up a regular dividend policy, which analysts expect could happen in 2026, paid out from 2025's profits that attracts a whole new group of investors. Think income-focused institutions, pension funds, certain types of index funds maybe you couldn't really consider the stock before. That kind of institutional money tends to be stickier, less speculative, and it helps normalize the valuation multiple over time. It completes the bank's journey from a purely speculative bet to potentially a core holding that generates income. #outro.
Wow, this has been a really deep dive into a country and a company right in the middle of this huge economic experiment. So let's boil it down. What are the key takeaways for you, the listener, trying to track this high-stakes situation?
I think Supervielle clearly stands out as the most agile, maybe highest beta way to play the potential upside from Argentina's credit market recovery. They showed that agility with their early balance sheet shift in 2024, and they've strategically tried to de-risk their future growth with that unique IDB partnership focusing on dollar-earning exporters and the clever low-cost customer acquisition through Mercado Libre.
But that high-growth, high-agility story comes with two very clear quantifiable risks on the other side of the scale. One, they have the lowest Tier 1 capital buffer among their main competitors. Two, there's the unavoidable risk that bad loans, the NPLs driven by disinflation, could rise higher than management currently expects, overshoot that 3.5% guidance. It's a really clean, stark trade-off.
The whole thing really is like walking a tightrope. Success absolutely depends on near-perfect execution in a market that, yeah, it's stabilizing, but it's still incredibly volatile.
So given that razor's edge, the need for Supervielle to grow fast with that thin capital cushion, trying to catch the big two, what does that massive personal ownership by the CEO, Julio Patricio Supervielle, actually signal to you as an investor? Does it guarantee caution, ensuring every move protects his family wealth? Or does it maybe signal a willingness, perhaps even a necessity, to take bold, calculated risks to grab market share and actually deliver on that high beta promise?
That tension right there between the personal incentive to be cautious and the strategic need to be aggressive, that's probably the ultimate uncertainty the market has to grapple with.
A fascinating tension indeed. Thank you for taking this deep dive with us today.